Good morning. This is Michael with backtothefuturetrading.com, and today is February 2nd, 2017. Happy Groundhog Day, everybody. I'm looking at crude futures today, and we're using an indicator that we've never used before, and it's called the FLUX ORION indicator. The FLUX ORION indicator. And it's very similar to the daily cycle marker tool that we've used in subsequent videos. But there are some very unique differences with regards to what the indicator is telling us and how far into the future it's telling us. So in the previous example, I told you about the daily cycle marker tool, which had 4 distinct phases. So we had a phase 1, a phase 2, a phase 3, and you guessed it, a phase 4. Well, in this system, there are only 2 phases. They are 180 degrees diametrically opposed. And so on the right hand side, you have the phase P event. And you'll see those represented on our chart with a green dot. And then over on the other side, the yin and yang here, the other side is represented by a red dot. And we know out into the future 1 month when those dots will appear. We know out into the future 1 month when those dots will appear. 3 days, 15 days, 28 days from now, subsequent dots will appear. And as I scrunch up the screen, you start to get a very distinct understanding for what historically happens at the arrival times of those phases. So just like the daily cycle markers, we tend to see that at the phase A events, the alpha events, when those red dots appear, crude for the most part tends to experience selling pressure, usually a lot of selling pressure. And then vice versa, when we arrive at the phase P events, where the green dots occur, you see that bottoms tend to appear, or we see a lot of buying pressure for a while. Okay, and that's been the case for years. As we scroll back here, feel free to pause your video at a number of locations and see what tends to happen at those dates. And you'll notice that the behavior patterns are fairly consistent when the banks arrive at these points in time. Okay, so let's take a look at where we're at right now. And there's a few tricks up our sleeve, a few tools at our disposal that we can use. We're currently 3 days away from a phase P event. P as in Papa. And that's going to be another green dot. But right now, we're actively engaged in a phase A event. Now, this is an energy cycle that the banks key in on. It's an energy cycle that affects human physiology and psychology. And so during that time, they like to screw with people's brains. They like to push when people feel paranoid, anxious, upset, discouraged, overstretched, overworked. And they like to encourage us when we feel happy and elated and joyous and ready to take on the day. Okay, so right now we're in one of those anxious phases, and you can see, or I can see, I hope that you can see, that there has been some trepidation in here. In fact, the market has been in a very pronounced consolidation phase over the last several 7 to 10 trading days. Okay, now we tend to see this pattern of consolidation in an uptrend. We tend to see this pattern of consolidation in an uptrend. Now, Michael, what do you mean by that? Let me show you a chart. This is a Richard Wyckoff accumulation phase chart. So Richard Wyckoff, back in the 20s, 30s, trades alongside of the greats William Delbert Gann, Elliott, who gave us Elliott waves. And one of his contributions to the trading world was this idea that markets accumulate and distribute, and they have different phases, right? And so when we started to look at the accumulation and distribution phase model, a lot of you follow this model, whether you know it or not. Double tops, double bottoms, 3 legs to a top kind of thing. The accumulation phase historically has, see where that red dot is right next to the reaccumulation phase? It historically has this zigzag or wiggle waggle to it. This is a place where people who've bought down below at the start of the phase are taking some profit. And it's also a phase where people who missed the opportunity to get in the trade are buying from them to fill the balloon with pressure, as it were, and drive up to the next leg of the markup phase. So burn that image sort of in your mind right now, and then really quick, let's take a look at what's happening right here. Do you see how that red phase, this area where we normally see selling, isn't really producing higher highs? In fact, it's sort of wiggling back and forth, just like our reaccumulation phase. And so that's one of the first clues that we have that things are steadily building pressure towards the upside. Okay, there's a second clue on this chart that I want to direct your eyes to. It's a technique that we use in the classes that I teach my students, and we monitor the height of this dot. Okay, so if I come over here, the dot is just a standard fixed distance from the close of the high of the candle. It's something you can adjust in your NinjaTrader indicator list. But I would like you to see what happened at the last 3 phase alpha A events. Do you notice how in the prior phase there was a point where crude was selling off, and then we sort of hit this bottom back in November of 2016. Pretty pronounced bottom that we moved up and away from. Of course, hindsight after the fact and so on. But now watch the behavior around the red dots. When we were supposed to have seen selling pressure, when we were supposed to have seen prices being pushed down, as they were off to the left of the screen for quite some time, we started to see an attack, or the market reaching up towards this very distinct area. You can see it very clearly. We're moving up towards the dot where we should be pushing away and down. And so that occurred no fewer than 1, 2, and now 3 times. Okay, so that's our second clue that perhaps the buying phase of crude isn't quite over. Because when given the opportunity to push the markets down, the banks have rescinded that privilege. They've essentially said, no thank you, we'll continue to let it rise. And so when you see that, it's people being where they're not supposed to be. It's people being where they're not supposed to be. Hey, I thought you guys were going to be down here on the first floor. No, we thought we'd take a look up on the ceiling. We thought we'd walk out on the balcony. Oh, I didn't expect to find you here. I didn't expect to find you here. And now, third day, I didn't expect to find you here. And so historically, when we see these consolidation patterns in a reaccumulation phase, I tend to do one of the following. I'll take the height of the consolidation phase and I'll double it. And what we'll generally see are breakouts where the market moves 100 and 200% of the initial consolidation width. So the width is here. This would be the first achievement, which would be a retest of the high. And then the second achievement would bring us, in theory, up to 5703. So just going on by what we see with a cursory example, we can determine that there are some longer term targets out on the horizon. Let's go ahead and get rid of the rectangle and the arrow lines, and I want to show you something else that Gann the man that we idolize here at Back to the Future, W.D. Gann, was very adamant about several things in his view of the markets. He said that time and price had this inexorable relationship. These two things were always tied together. Let me see if I can find the quote for you. So here's one of my favorite William Delbert Gann quotes, Forecasting by Time Cycles course quote. By a study of the time periods and time cycles, you will learn why tops and bottoms are found at certain times. There's the emphasis on times. Now watch. And why resistance levels are so strong at certain times and bottoms and tops hold around them. So Gann has an implication here for us to pursue. He says, once you find the times, there's a second component. It's a BOGO, a buy one, get one. And once you find the times, there are resistance levels associated with those times where bottoms and tops will hold. So we've seemingly found very important times where crude, in fact, is making very predictable, very reassuring moves at certain times, these phase A and phase P events. But what about the support and resistance Gann promised us? Well, what you'll see on the chart here is every one of these signals is spawning a horizontal line out to the right-hand side. Okay, and right now I just have them going from signal to signal. So I'd like you to see when I come into the tool that I can turn those lines on in an infinite amount. I can have them extend forward to the right. And when I do, watch what happens. Now we have 1/2 of a grid extending forward to the right. What do I mean by 1/2 of a grid? Well, let's go ahead and stretch this out. And I want you to start to see where the market is finding support and resistance and why. If we go and take every one of the phase P and phase A events and we put a vertical line through it, you'll start to see that there's a regularity to this almost. And the market is in a lot of these quadrants, a lot of these boxes. It's making very distinct movements. Now, as I spread this out and we go deeper, I'm going to take the lines that have been drawn and I want to darken them so they jump off the screen a little bit and allow your eye to see where CL, where crude futures, is stopping and starting. You see that? There appears to be strong resistance and support, or as Gann would say, tops and bottoms that are forming at these lines. In fact, to really duplicate that effect, what I want to show you is what happens intraday at these levels. So I'm going to come in here and tell NinjaTrader to put these lines on all of our charts. Did you know that? That's a great trick for NinjaTrader indicator users. You can come in here and tell the computer, hey, I've got a drawing object. It's very important to me. And I just want to cast it out to any chart that I open that has crude futures on top of it. Having trouble grabbing this line here. There it is. And you're going to see something very interesting. You'll find that CL uses these levels as rest areas, as stop points. And that's good news for you because after a thorough study of these phenomena, you can decide for yourself if in fact you want to use them as support and resistance. So I'm going to go ahead and open a new chart. I have my other monitor off here to the left. I'm going to open crude and I'm going to look at a 15-minute chart for the last 15 days. Just nice round numbers. Okay, so here's my chart, and there are the lines that I just put on all of my CL charts. Now let's get rid of these dumb separation break lines, and I'm going to start to scrunch up the screen. Now, do you see what I see? What I see are levels where price is bouncing. Levels where price is bouncing. Remember the Gann quote, right? Once you find the time periods, you will find resistance levels where bottoms and tops hold. Okay, and when I look at this chart, I see resistance levels where bottoms and tops are holding. Now, I'm going to read these levels out to you in a moment so that you can write them down and use them in your trading. But I want to tell you about one other thing that it's pretty advanced. We won't have too much time to go into it this morning. I want you to use a technique, I call it the law of 50, or the 50% rule. And everywhere you see a large gap between two lines, I want you to cut it in half like a pizza pie. Okay, so all I'm doing is I'm using my Fibonacci retracement tool, and anywhere I see a gap, I take it and I pull it down in half. Okay, so these next two lines between 53.30 and this one right here, which is 52.70, I pulled my gap. And now this large big one, 52.70, down to the lower two lines is 51.57. Okay, I'm going to cut that gap twice. 51.57, back up to this line at 52.14, 52.14, up to 52.70 again. Now I'm going to go back and put those horizontal lines that we drew on top of the fib lines, but I'm going to make them slightly smaller. Let's make them one width, right? Set that as default. Now look at where the prices on the 15-minute chart are bouncing. And you'll see that there's a hidden support and resistance network. Remember how we got here. We used time cycles to get here. Gann told us that we would see what? You'll see resistance levels generated by the time cycles that cause bottoms and tops to hold around them. So with that fresh on your mind, look, we've discovered resistance levels that cause bottoms and tops to hold around them. Okay, and that last level that we've discovered that was right on time using a Gann technique that he said we would see was at 54.28. Okay, look at the last place it found support. Down here at 53.91. There's an intermediate level right here, two lines close together at 54.02. And when I see two of these Orion lines or daily cycle marker lines or flux open price lines close to each other, I will almost categorically connect them with a zone. Because there's confluence there, right? There's confluence there. And this helps me see which lines are actually primary lines as well. When there's a rogue one off by itself, I will color it. So that gives the chart some dimensionality. All right, so everybody understand how we got here? We used the lines generated by the time cycles. We applied the lines to all of our CL charts. And now, once the lines were on the chart, we were able to begin cutting the gaps in half to find the intermediate or the secondary lines. If you were on a lower time frame than this, and you saw that these gaps were too large, say you went down to a 5-minute or a 1-minute chart, keep applying the lines and keep cutting the gaps in half. Use the 50% rule, and you will find on any chart you're trading, there are primary, secondary, tertiary, whatever the word quad means, quarters. Just keep cutting those gaps in half, and you will find the primary reversal points in CL. So let me give you those lines over here now for the area that we're in so that you can do those studies. We're currently seeing those points at 51.46, 51.56, 52.70, 52.74, 53.29, 53.34, 53.92, 54, 54.53, and 55.10. Okay? One of the other things I want to bring your attention to is how the market will use these levels as stair steps. Think of it as a set of stairs that we're climbing up and down. And so once we have the double top, watch, we'll start to move down and react with the levels one at a time. So we came down here, we came down here, we came down to the next level, we came down to the level underneath it, we retraced, we retraced, we retraced. The next level to be attacked was here, and then we never made it down to 52.13. We had a double bottom right here with divergence. It started to come back up. Now watch how it attacks the levels and clicks them off in reverse. It went here, it went here, then we had a reaction here, doesn't quite get to this level, and then it moves away. So that's a very important phenomenon I want you to key in on. When banks are about to reverse, they don't go to the next level in the stair. They stop intermediate, and then they reverse for a very large distance. And you can see what that looks like. All right? It happened over here. It happened up here. And when you see that and it starts to break down and go the other way, the stair steps will get hit in the opposite direction. In this case, here and here. We don't hit the next level, and then we start to come up. We attack that level. We attack this level. We attack this level. Now look how it's taking them off one after the other. And then this one. We came back and hit this level again. Okay, and we just hit the new one up here. So what does that tell you about their intentions? 54.28 was touched, meaning we didn't see what happened over here happen over here. We didn't see what happened down below happen over here. They have checked this level off their list. Accomplished what they wanted to. It sort of tells me that this level is next up. 54.54, 54.56, up in the mid 50s of the 54 area, because they weren't repulsed by that area like they were over here. So this may very well just be a retracement in crude. But either way, you now know what price levels to look for those super reactions at using the time price lines generated by this chart. So I'm going to go ahead and delete all those off and let you take those values from the video that we just produced here. So this is one of many ways that we look at what crude futures should be doing out into the future, out on a large time frame. If we wanted to come back to a smaller time frame, I can use the standard FLUX professional tool set to accomplish that. And here's what we're enveloping right now. So these are standard histogram charts. This is sort of what we're known for and what we're famous for. Let me get rid of some of the lines up here, or it'll be a little confusing. Stand by. Okay, we're back. Now, CL has just put in a very distinct pattern. There's a guidebook that I hand out. It's called the Hitchhiker's Guide to the Histograms, and I give it out in all my webinars. I'll put a link to it in the description of this video in case you want to read it. And there's one very particular pattern that we ask all of our customers to learn that repeats pretty consistently, in fact. And so if I pull that guidebook here, I want you to see what usually happens around a certain time. It's one of the very last patterns that we see. If we arrive at a higher high at a buying pressure time, meaning we arrive at a time where we normally see a green dot. This could be a daily cycle marker indicator. This could be an Orion indicator, but in this case, it's a flux histogram buying pressure time. If it arrives at a higher high, we historically see exhaustion and the market falls away. So when we're at one of those histogram times where we're supposed to see buying pressure and we've already arrived at the peak of the mountain, there are no higher highs to the left of us, we're there, then we historically see exhaustion. Well, on our CL chart, I want you to notice that that's been happening a lot. We had a higher high over here, we had a higher high over here, and now we have a higher high over here. And in each of those cases, the market is pulling back and pushing away. Okay. The other thing that I want you to notice is that when we arrive at the selling pressure times lately, look what tends to happen. At 6 a.m. it was a selling pressure time and it shot up. At 9 a.m. it was a selling pressure time and it shot up. At 11 p.m. and 1 a.m. it was a selling pressure time and it shot up. Last night at 11 p.m. it was a selling pressure time and it shot up. We're tracking. Why are the banks doing this? Why are the banks pushing this out? Well, the next one of those selling pressure times occurs in the 10, 11 o'clock hour coming up here in 120 minutes from now. So we're going to have another one of these in a very short period of time. Yeah, I did miss one. The voices in my head just told me I missed one over here at 12 p.m. Okay, so we're headed 10 into 11 o'clock today into potential another upward push in crude, where we attack that upper level that we saw. And then you can see we have the times out into the future for the next couple days, and we can monitor those for tomorrow and the next day. But as for right now, this is what we're looking forward into the short term. Looking for a minor pullback like we saw here, like we saw here, like we saw here, and then another push up. Okay. Be careful around 11 o'clock, 10 o'clock today, because there is a good chance that we could see this. We could see another one of those red dots pushing down too. So if you're an aggressive trader, wait till 10, 11 o'clock today and look for signals on your lower time frame to confirm the longs with the breakouts of the resistance areas I've given you up to the higher highs. If not, wait for a breakout of the high. And then use money management, good risk reward ratios accordingly to test that area and see if you don't catch the breakout into the upper highs. If you don't have the Flux Professional software, I almost feel a little sorry for you, because we're able to see out into the future when those next buying pressure and selling pressure times are coming off to the right hand side of the chart. And that gives me some really advanced notice to let me know when to be waiting for my short-term trigger confirmation signals. And so these 1 and 3 minute moves that I'm monitoring on 1 and 3 minute charts allow me the opportunity, using the data mining techniques that we're employing here, to monitor when to look for those pulses up. So as I get closer to the 10 and the 11 o'clock hour, I will have advanced notice as to what times the banks are most likely to push up and push down. These times don't change, they don't recalculate, they don't reappear and disappear. None of the monkey business that the other trading vendors get away with when they sell you software. So really strongly encourage you, go ahead, click on that video link down below in the description, or visit us at the website to find out more about how you can know or use this study with your NinjaTrader indicator studies to sort of determine when the moves you're waiting for will come out into the future. It's a much less stressful situation, less anxiety, less pressure, less overtrading, less analysis paralysis. When you know with reasonable certainty that a move may be coming in the future, you just wait and prepare for it and go into the market on your own terms, following the banks on their coattails. That's it for today. Good luck. Good trading, everyone. We wish you prosperity. Remember, the markets you trade are not random. Don't forget to like us, subscribe, leave a comment for us down below. Most importantly, take that demo so that we can teach you how to use the most powerful weapon the banks have against them. Thanks again, everyone. Appreciate your participation in these series of training seminars, and we look forward to working with you in the future.